Imagine this situation. You open the HBAR chart today and think, that's it, another sideways chop, the market is dead, XRP is stuck, Bitcoin is just ranging, HBAR isn't moving at all. Maybe I should just sell it and go chase quick multiples in some meme coins? Sounds familiar? If yes, this video is for you, because today, we'll break down why what is happening with HBAR right now looks less like the death of a project and more like a quiet accumulation phase. And why right now, a retail investor who is panic selling at 0.09, 0.1 might soon be staring at the chart thinking, why on earth did I sell at the very bottom? I'm not a financial advisor. You know that. Everything you're about to hear is my personal view, my experience, my mistakes, and my conclusions. But the data we'll look at today makes it very clear that something interesting is happening with HBAR. 1. Why everyone thinks HBAR is dead. Let's start with sentiment. If you look at your Twitter feed or the comments under any HBAR related post, the vibe is basically the same. How long are we supposed to wait? Other alts are pumping, and HBAR is sleeping just like before. And to be fair, people have a point. The price is currently stuck around 0.09, $0.1, sitting below key moving averages. The 200-day moving average is somewhere around 0.1, 0.16. So, on the higher time frame, we are still under pressure, and visually it looks like prolonged stagnation. Add to that several red months in a row, overall market fear, and the fact that hype has shifted into Zora, Pump, SUI, and other retail amusement rides, and you get the perfect cocktail for the phrase, HBAR is dead. I'm out. But let's ask ourselves a simple question. If the asset is dead, why do institutional players keep building infrastructure around it? Why are there new real-world asset tokenization cases, new banking partnerships, new pilot projects? 2. Hedera is built for banks, not pump and dump shillers. We have to be honest. HBAR is not a token created to please fans of instant extend move. Hedera was designed from day one as an enterprise solution, a stable, predictable network governed by a council of large corporations, Google, IBM, Boeing, banks, telecom giants. It is not a chaotic DeFi free-for-all, but essentially a corporate consortium in the blockchain world. Right now, a key trend is unfolding around Hedera tokenization of real-world assets, the so-called RWA sector. Banks and financial institutions are testing on Hedera, tokenization of securities, settlement of FX deals, issuance of custom tokens and stablecoins for their own needs. To retail, this looks boring. No spectacular pumps, no crazy memes, no TikTok screams of, we'll all be millionaires by Friday. But for institutional investors, this is exactly what they are looking for. Predictability, legal structure, a governing council of recognizable companies, and a clear roadmap. And this is where it gets really interesting. The retail market is emotional and lives in a here and now mode. Institutional capital lives in a 3-5 years ahead mode. So when retail sells in fear, larger players can calmly accumulate an asset in the exact zone where it looks dead. Part 3. Regulatory Catalyst, Clarity Act, and 2026. Now let's add another strong factor regulation. Around 2026, both in the US and other jurisdictions, regulators are actively working on legal clarity for crypto assets. One of the key elements is the so-called Clarity Act, which is expected to provide clearer rules for tokens that are not classic securities in the traditional sense. Why does this matter for HBAR? Because Hedera is a story about corporations, banks, and institutions. For them, it is absolutely critical to know that they are building infrastructure not on an asset that the SEC might label an illegal unregistered security tomorrow, but on something that fits into a new regulatory framework. Once there is clarity on the legal status of assets like HBAR, one of the key risks disappears for big players. At that point, the demand curve can start changing very quickly. What has been quietly accumulated for years suddenly becomes trendy, compliant, and institutionally approved. In essence, the Clarity Act and related initiatives are not a magic send button in a single day. They are a door that opens the way for long-term capital. And those who are buying HBAR now, during a period of market depression and exhaustion, are essentially betting on that inflection point. 4. What the hard numbers say about HBAR's price. Let's move from narratives to hard numbers. At the time of this recording, HBAR is trading around $0.095. This is slightly above a key support zone around 0.09, 0.092, which acts as an important level for the bulls to defend. Technically, the picture looks like this. The price is trading below the 60-day EMA, somewhere near 0.104. The 200-day SMA is around 0.158, and there is still quite some distance to it. The RSI is hovering around 45. This is neither overbought euphoria nor deep oversold, but rather a sluggish, almost neutral bearish state. Looking at forecasts and analytical overviews, many models now suggest that by the end of March, we may well see a test of the 0.110.12 range, provided the bulls hold current support and manage to absorb the first wave of sellers. On a medium-term horizon of 2026-2030, some analysts see potential for HBAR to move significantly higher than current levels. But let's not drift into Moon and Mars territory. What interests us is concrete levels that we can trade relative to today's price. 5. The logic of silent accumulation. Now imagine a large player who believes in Hedera as infrastructure for banks, RWAs, and corporate applications. They need an asset they can enter with size without sending the chart vertical. They need a stretched out phase where retail gets tired, exits, loses faith, sells out, and on every such flush, they quietly buy. How do such phases look on the chart? A long sideways range within a fairly tight band, repeated bounces from the same support zone, a lack of bright viral volatility. All of this looks very similar to what HBAR is doing right now, around 0.090.1. This is not the kind of move where we just pumped 50% in a day. This is the kind of move where you are being given time to enter while the crowd is sleeping or capitulating. I am not saying that whales are definitely accumulating. What I am saying is that this kind of price behavior fits very well into an accumulation scenario rather than an asset death scenario, especially if, alongside it, you see growth in partnerships, use cases, mentions in institutional narratives, and ongoing product development. 6. How to approach HBAR from a strategy perspective. Now to the most important and, for some, the most uncomfortable part. HBAR is not about get in today, see a 3x tomorrow, and run. This is an asset that makes the most sense in a framework of phased accumulation and gradual profit taking. Here is what that might look like. This is not financial advice, just an example of an approach. Base accumulation zone. The 0.090.1 range is where you already see seller exhaustion and periodic buying interest. Here you can start forming a partial position, understanding that your stop logic has to sit below key support. Stop and risk. If the 0.09 level breaks convincingly and price consolidates below it, that signals the scenario is either extending in time or shifting into a deeper correction. In that case, the classic play is to accept a loss within a predefined 1-3% risk of total capital, rather than turning the trade into an endless prayer. First targets. The first obvious target is 0.1, 0.12, local resistance that the market has tested before and rejected from multiple times. Here, you can take partial profits, move the trade to break even, and stay in the market more calmly. Medium-term target. A test of the 0.150.16 zone, where the 200-day moving average sits, will be a serious exam for the trend. If price gets there, it is a different regime. Many who bought lower will start taking profits, and then we will see whether there is strength to move higher. This kind of structure helps you avoid trying to catch the exact bottom, and instead work with scenarios, not emotions, especially in assets where the fundamentals are strong but the market is not yet ready to pay full price for them. 7. Bottom line, HBAR is a bet on a cycle shift, not hype. If we distill everything to a simple idea, it is this. Yes, HBAR right now is not giving you the explosive moves you see in Zora or meme coins. Yes, a 0.090.1 price looks dull compared to green screenshots from other alts on Twitter. But exactly these kinds of phases often precede major reversals, especially when the fundamentals are on the asset side. Banking partnerships, RWAs, regulatory shifts, institutional grade governance. And while the average retail investor is once again saying HBAR is dead, the players who think in 2026, 2030 timeframes can quietly do what they do best: accumulate. Your choice is whether to be among those who capitulate in a despair phase, or among those who treat volatility calmly, manage risk, and give their investment thesis time to play out. Personally, I think writing HBAR off right now is at the very least premature.